Hello traders out there in Traderland, D7 here with Grok Trade, and let's hit the ground running. That's my light. Start off here with the spiders. I'm going to go back in time. Last week we were looking at the S&P 500 daily chart. It's called the spider, and this is all we saw. If you remember right, I said, hey, all you Grok students, look at what's happening on the volume, look at the Fibonacci's, look at the reward to risk ratio, and look at, well, all the different things with the 301 mentor students. I said, do that, you know what I'm talking about. And sure enough, bears came to play. Bam! To the downside. More downside. More downside. Friday, and that's where we're at on Friday. The question is, what's going to happen next? It looks like we had 1, 2, 3, 4 bars heading down with lower highs, lower lows for the most part, a little choppy on the descent. But we do have a bullish Harami reversal pattern. The question is, does that mean we're going to bounce here? We definitely could bounce right now. We could be bouncing going into the near future, and we need to, and let me explain to you why. Let's look at a number of different things. First thing that I'm looking at here is a bullish divergence taking place on the MACD centered oscillator. You can see that down here. You can see the higher swing low, but we have a lower swing low right here. Do you guys see that? It's a bullish divergence. That bullish divergence tells me we have a really good chance of a reversal commencing and taking place and heading to the upside. However, below all the major moving averages, that's bad news. The other thing that's bad news is the daily chart on the S&P 500 has been going up forever, ever. And we go into this pinching rising wedge, and we said, watch out for that, because anytime you have a rising wedge, an ascending wedge, whatever you want to call it, when you break that, especially after you have an elongated bearish divergence, you will see a decisive move to the downside, and that's exactly what we had. And I called big time warnings back here on when we started breaking these trend lines. You got to know these trend lines really well. That's why we spend so much time on the mentorship. But the trend lines are key. If you learn those, that will help you out, because the trend lines will tell you what type of chart pattern you have and where you should be looking to get in, and or if we're in a bull market or bear market. It tells you everything. You got to learn these and learn these well. And there's 3 different type of trend lines. I only show you one on these videos. So anyway, there's 3 that you need to know. Okay, minor, major, and main. So those are I'm tempted to write a book on trend lines, because very few people understand them to the level I do. I've been trading 23 years in the markets, and I didn't pay any attention to them until they started increasing my odds in trading. The more I started looking at them, the more I realized institutions are looking at these trend lines. And how do I know that? It's because they keep getting tested and validated. And that means the institutions, being 85% of the markets, they drive the market. And because it is happening, it becomes a self-fulfilling prophecy. That's why they're validated. That's too much for too short on a quick video right here. But let's go to the diamonds here. The diamonds. So we're looking here at the daily chart. On the diamonds, we have the rising wedge. We broke down. Then we do a bear pullback. Then we have a what type of candlestick reversal pattern for extra bonus points down in the chat. Tell me what type of reversal candlestick that is right there. It can be confused as a couple. One thing I like to do is go to a line chart. Go over here. I'm using TradingView. There's a link down in the description area if you're interested in the TradingView. But I go here, touch this, boom, we're in a downtrend. Let's do another. We have this and this, kind of a falling wedge, not looking too bad really. And again, guys, we have a bullish divergence on the diamonds. See this? Bullish divergence, which is really good to see. Let's go to the NASDAQ tech stocks. So the NASDAQ tech stocks go here. We're in a downtrend. You can see this right here. Nice bull pullbacks taking place, bear pullbacks rather, and we come crashing back down. So we're in a downtrend. We're at a support area. We could rally higher, but bad news, big volume on the sell side here on the markets. Okay, we're dropping on big volume, but look how we hammer out, hammer time. We come down here, get near that trend line. Buyers come in, go up, and hammer out. Hammer time. You guys remember that? Major trend line there. look for more buyers to come in there. I do not see a bullish divergence on text, but I do see a candlestick bullish harami, plus what's incorporated with that is a hammer. And I gave you guys hints last time. Let me tell you what the hammer is. A hammer is when the lower shadow, I'm going into teaching mode here for you guys. The lower shadow has to be 2 times or more that of the real body. The real body is the high and low, the open and the close rather, the open and the close. Doesn't matter if it's a red candlestick, a white candlestick, purple candlestick. It doesn't matter. Whatever the high and the low of that body is, it's called the real body. So you have to have a hammer is anytime you get a drop, okay, a drop, you get a down leg, lower highs, lower lows, red candlesticks dropping. After that, you get either a white, green, red, it doesn't matter what color this is, hammer if and only if the lower shadow is 2 times or more, okay? The real body, it's called a real body, with little to no upper shadow. So this is a hammer. So now you know. Small caps, Russell's 2000, big symmetrical triangle, big area support, and a big bounce, higher high, higher, lower low. But what's interesting there is this is nothing but buyers, that lower shadow, just like here. Nothing but buyers, 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 and rally to the upside. Buyers, 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 buyers. Will this go higher? It's certainly set up to do so. So if small caps go higher, the market should follow. So that looks fairly good. Again, volume, not liking the volume across the board, but if we start breaking those lower trend lines, okay, if we get down below the 200-day moving average, and we drop below these trend lines on any of these charts I'm looking at, the markets are toast. Stick a fork in it. Bear market. This will be the top that we have been seeing. Okay, remember I said that. But as long as we can stay above these moving averages, above these trend lines, all is well out there in the marketplace. But financials, let's look at the financials here. My air conditioner just turned on. I got to turn it off. Hold on. It jacks up my audio every time it comes on. I don't know if you notice it or not. I just jacked it up, but it's still on. It doesn't matter. So this is financials. Financials daily chart come down. Do not like the volume on the sell side, but we have a big bullish harami here. So and we're closing back above the trend lines. That is great to see. So is this a bull pullback? It certainly could be that. I mean, the one thing I'd like to do is pull a fib here. Take a look at it. We look at this pull back to the 50%. This is a great area to pull back to. This could rally to the upside. We needed to do that to stay bullish in this market, okay? US dollar is dropping Thursday, Friday, down after hitting resistance, and we're in an uptrend though. What type of pullback will we get? If we continue downward, that's going to do really well for securities, equities specifically, and commodities. Speaking of commodities, let's go to silver. Silver's in a downtrend, heading down below most moving averages. Not a good place to be. I do not like the idea of being in gold and silver. Looking for reversal of patterns on the bigger time frames to be able to get in. This gold, same thing. We go down, 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 broke a lot of support, rally. We're back at a resistance area here. If I go to a line chart, you'll see this. We broke those lines. We rally back up to the resistance area. That could start to go lower. So look for that. VIX. The VIX daily, let's go to the daily candlesticks so we can see this. So we had this triangle. Let me show you this triangle. We broke out triangle. We pulled back to support levels, and we're rallying back higher. We are below 22, still above 20, guys. This tells me, relatively speaking, we are going in an uptrend. These two trend lines are going up. VIX fear is getting higher. That's not good. That we have to really get down below 18 or so for us to feel like we're going to get back onto the bullish train. That has to happen. Quick look at Bitcoin. Bitcoin is in a big symmetrical triangle. Had a great rally the last 4 or 5 days, going up to a resistance area. If we break that resistance area, we could be at 60,000 before you know it on Bitcoin. And Ethereum, same thing, big symmetrical triangle. Had a great week of bullish activity to the upside above all major moving averages, coming up to this area of resistance. If we break this resistance, we'll do an all-time high on Ethereum. We'll get to 4,000, probably 5,000, if not 6,000 or higher, okay? And that's what I'm looking for. And I hold a bunch of Ethereum. I do hold that. But one thing I want to look at here is I want us to take a look at the weekly charts and the monthlies, because the monthlies told us something really important. This is the spider's weekly chart, okay? Big, nasty rising wedge, big, nasty bearish divergence on the MACD centered oscillator, and a breakdown on big, nasty volume, okay? All that's happened. And now we get this. It's not a hammer, okay? We already know what a hammer is. All that was a thrusting, not even a thrusting. Yeah, it's kind of a thrusting pattern here. That's all that was. But we still have a lower high and a lower low. This is still a down leg. There's no reversal pattern with this red candlestick. Nothing is happening here. And it's on huge volume. What I do like are the two lower shadows. Last time we got these two lower shadows, see these? We rallied higher. We got two lower shadows. Will we rally higher? We certainly could do that. We could do that going into Christmas, the Christmas rally. So that is possible. The Dow diamonds, if you look at this, we were in this rising wedge, okay? Rising wedge. Then we go into a weaker rising wedge, which means more bearish. And then we finally broke down. We did have a bullish thrusting. Then we have a higher high, higher low. But look how they sold into it for the week. Again, these are weekly charts. This looks really toppy to me. Really toppy. Big, nasty bearish divergences. And NASDAQ tech stocks were in this big uptrend. Up, 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 up. We broke one trend line, but we are at another trend line in the 20-week moving average acting as support. If we go bearish next week, the techs are in serious trouble. We've got to bounce here for techs to stay buoyant, to stay strong, to stay. They need that shot of vitality with the bulls coming in to give it buoyancy and strength to the upside. And we would like to see it come in with a vengeance, because right now we are at the death area. Weekly chart at major support. We have got to, by Friday, close above this. That has to happen. Small caps. Big bullish pennant. This is the weekly chart, guys. Really bullish. There's your flagpole. Here's your pennant, just waving in the wind. If we can stay above this lower trend line and break out above those highs, this market could get really bullish and fast, okay? Really interested in seeing if we could do this. We've been in consolidation since February, going sideways on the weekly chart. But let's see what the banks are doing. Banks were in this big, nice uptrend, okay? Big, nice uptrend. And I'm going to draw another trend line from here to here. If you do that, you can see rising wedge, bearish divergence. Look at the red lines there. And we broke down below it. So one thing I'm looking at, I want you guys to look at it too. We have this little moving average here. It's the 20-week moving average. Make sure you're paying special attention to the 20-week moving average. If we get it close below that, that should spell problems. Should spell problems. US dollar, big rising wedge to the upside at resistance. So that tells me, and 200, big red, where people sold into the US dollar there. This could break down. If this does in fact break down, markets will perform quite well if and when that happens. Silver weekly broke a major area of support. We do have a hammer, but if we don't get back above this area, stick a fork in silver. Gold had a big symmetrical triangle. This week we broke down 2 weeks ago, but now look at this hammer. That is a hammer. Remember the definition of a hammer. But if it rallies higher, this could be a dead cat bounce. We drop, do a small bounce, and then drop to this lower trend line. That could be problematic, and that could be in the future of gold. I would not want to hold any of those. VIX on the weekly popped up, came back down last week, or this, but I mean 2 weeks ago. This last week, we broke over a major trend line. We broke over a major trend line right there. See that? So that is bearish, guys. The VIX on the weekly is, in fact, bearish. Bitcoin, quickly, if you don't have any exposure to Bitcoin, you need to. Everyone should have some measure of exposure to cryptocurrencies. And you can do that with GBTC, and you can see that right there, GB. So TC. This is the weekly chart on Bitcoin. Bitcoin did a little bull pullback, rallied higher. This is getting ready to break out of a major triangle. Spread this around your Bitcoin and crypto people. GBTC, the same thing. Anybody can get this in your IRA. Just go to it's Grayscale Bitcoin. Just put GBTC, and anybody can have some exposure to Bitcoin through that ETF. And Ethereum weekly at major support and bounce. So it looks like we're getting ready to get a major bounce to the upside. Love the lower shadows. That is great. Now, before I let you out of here, you've got to understand that the last month have closed out. I want you to not pay attention to the current candlestick because we're only a day or two into that. What I care about is how we closed last month. We closed below a major trend line. Do you see this? Support, we closed below that support. Guys, that is a major problem in the markets on the large scale side, okay? No good at all that has happened. But one thing I'm looking for is an EMA. It's my 7 EMA on the monthly chart. I would add that to every chart you have. But if you have this, if we close below that, that's going to be problematic, okay? So that's something I'm looking at. The diamonds monthly. We're almost trying to close below that 7 EMA, exponential moving average. This one I don't care about yet, but we were right at major support. We didn't close below it. It depends on this month. Will we close below that trend line? I don't know. NASDAQ, tech stocks. We're up. As long as we stay above that 7 EMA, I'm okay. If you look at this small caps Russell's 2000, major trend line, support. Let me just show it to you. Support. We're right at support. And the 7 EMA monthly. Very important that we stay above those. So we're at the critical mass area here. Very, very important that we do that. Financials is a big high base on the big high base. Look at this, guys. This is QE. This is the Feds coming in to save the market. That's all this is. And if the Feds keep pumping money into this, the better that will be. I like to see volume here dry up. Whoops, I don't want to do that. I want to go here. Put in volume. These are all my favorites here. But if I go to volume down there, I'll add that to the bottom. I usually like my blue. But see how volume is, kind of lightening up here. It's almost too much volume. I don't like the volume here. I wish it was less for this high base. So it's not as great. US dollar monthly is up, but this is a bear pullback. Look for that to drop. That'd be really good for the markets. And you can see here that the MACD lines are coming together. So the histograms here are getting smaller. That could tick to the negative side, and that will roll over to the downside. Silver monthly is a bull pullback. This could be ready to bounce at some point on the monthly. Gold, the problem is last month we broke a major trend line. Guys, gold was here support. We broke support. Gold is in major significant trouble to the downside. That is no good there. VIX monthly last month broke over a major trend line, and I'll show you the trend line. Resistance. We broke resistance. That's no good, and we're above these very important moving averages. This is no good for the markets as a whole. Bitcoin, monthly chart, down, bear pullback perhaps. Let me see something here. This is very, very interesting. If I go here to here, we're over 50. This area is 61.8, 51,000 could be an area of resistance on the monthly chart, okay? That could be the case. That's something I'm watching. So that's it. Anyway, we got a mentorship coming up. Feel free to join us if you know how to find us. Just go to Grok Trade, look for mentoring, and fill out the form, and we'll have a chat. But anyway, it was cool. Today after church, we went to a restaurant called the Bull Market. Anyway, check that out. Catch you later. Bye. Check this out, a restaurant called the Bull Market, but we're in a bear market right now. We're in a bear market, guys.
Yeah.
Bear market.